What's up, YouTube? Welcome to the Give and Grow Investment Channel. We're here to talk about all things investing. Eric and Ryan coming at you again. So, quick preface before we start today. Remember, this is not investing advice. This is for education and entertainment purposes only. We are not financial advisors, but we are very passionate about investing. And we can't wait to show you our systems, our psychology, and our methods. And we can't wait to learn and grow with this community. With that being said, we want you all to get to know us a little bit better. So we're going to ask each other some questions just so you can understand our financial backgrounds, where we're coming from, and just kind of our visions for the future. So let's get this party started. Ryan, tell me, what was your financial status growing up, and did you learn about finance from an early age?
Yeah, so growing up, my family was pretty much in the lower class, and as I got to high school, we kind of got into the middle class, which is great. But it wasn't until the very end of my high school, in my senior year, I took this personal finance class, and that's where I learned about Dave Ramsey and just staying out of debt and having no credit cards, pay everything in cash, all of that stuff. Which, you know, a lot of those principles, some of them, but not all of them, I tried to maintain to this day. But yeah, that's how I got started, and that's pretty much my background. What about you?
Yeah, man, I had a great middle class family, had all my needs provided for, parents paid for private school, paid for college. I was probably a little spoiled, but it was a good, blessed life. Early on, no, I wasn't interested in investing. I was too busy playing Pokemon and video games, playing sports. It wasn't until my late 20s, I was finishing up OT school. I was on my last rotation, and I knew I was going to have a lot of student loans, so I was trying to get ahead of the game. I discovered Dave Ramsey, kind of realized he had some principles: pay off your debt, live below your means, invest a certain amount, and be a cheerful giver. I really enjoy Dave Ramsey. I've learned a lot from him. Don't agree with everything, but that's definitely where my foundation started.
All right, that's cool. So the second question is, why did you want to get into personal finance?
So I just wanted financial freedom. You know, I don't want to have to work until I'm 65 or 70. I want to work until I'm about 40, you know, and I want to get up and I want to do the things I want to do, enjoy the things I want to do. I want to be creative. I want to get started with some awesome projects. Just continue to build brands, continue to educate and help people, and just learn. That's really my main why. What about you, Ryan?
Yeah, my main why was just creating that generational wealth for my family in the future. That's probably the biggest one. And, you know, just having money, you know what I mean? Just being able to have resources, have options, you know, all that stuff seemed pretty important to me when I first really learned about it back in high school. So that's pretty much my why.
Awesome. So, can you tell me, did you want to be more of an extremely active investor, or did you want to be more passive when you first started?
When I first started, it was definitely more passive. Just put the money away, let it, just let it do its thing. You know, I was aware of all the calculators. You know, you can see how much you make after like a certain period of time, and regardless of like, you know, what it was in, I was like, okay, well, you know, it can be in, something that's like, you know, risk free and it'll still make money. I was actually very into the saving / budgeting part of finance back in the day, just like super into it. Like, you know, I was just crunching the pennies.
Yes, just to interrupt you, you're one of the best budgeters I know. How much?
Thanks.
What do you think is your saving rate like per month?
Probably like 50%.
Woo, I got to get on his level. This guy's awesome.
Oh. But yeah, definitely more passive. I honestly didn't even really invest a whole lot back in the day. You know, I had some accounts back in the day that I just kind of put like a little bit in there. I was like, oh, well, you know, this is going to be something someday. And just due to some circumstances, you know, I actually took a lot of the cash out of those accounts because, you know, I wasn't trusting the process. But since last year, you know, I'm fully into just doing my research and really understanding how to make money in the market. So, but yeah, what about you? Were you more active or were you more passive?
I was definitely more passive starting off. After doing a lot of research, I knew I needed to be investing because I wanted compounding interest to be working in my favor. But I didn't feel like I knew enough to be active. So I started off with Betterment. I was just doing robo advising. But yeah, that was definitely my foundation. I've definitely shifted. I'm more 50 passive, 50 active. The goal is to be eventually like 80 active, 20% passive. I want to try to beat the market, just kind of make a sport of it.
Yeah.
But yeah, that's just kind of my outlook on it right now.
Okay, that's awesome, man. What are some of the things that you kind of started with? Like, I mentioned earlier that I was really heavy into saving and like budgeting, but what were some of the things that kind of that you just started with?
Well, since I was so Dave Ramsey starting off, I was trying to pay off debt. I think I was paying like $2,000 a month on my student loans. So really, it was just paying off debt, saving up, and investing a little. But like I said, I've kind of shifted my methods lately. Definitely more investing, still paying off my loans, but not near as aggressive. But yeah, that's just kind of how that started.
It's awesome, man. Yeah, I mean, I pretty much already said. I've already answered this question.
Yeah, that's fine. Well, I'm going to ask you. So, what resources did you use to learn about the styles we talked about?
Obviously Dave Ramsey, big influence on me. As of recently and since last year, YouTube, man. YouTube has been the primary means of me finding out a lot of information. I don't really read very much.
Yeah.
Unlike you, who reads a ton. But just being able to see, kind of like what people have to say. There's a lot of different opinions out there. Different content creators have different styles, and I can learn a lot and kind of take where I learned from them and kind of make it my own.
Man, that's awesome.
Yeah, and obviously, I would say that like you're also probably one of the bigger resources that I have. You're always sending me stuff about what you're seeing going on out there. The plans that you have, which we'll get into later on in the video. But yeah, that's YouTube is probably my like primary resource. What about you?
Cool. Yeah, so my main resource is to read some more. When it came to learning about investing, I read every Warren Buffett book I could find. I also learned about Charlie Munger, a lot of podcasts, driving to work, coming home. I still do that every single day, Monday through Friday. Love my podcast. YouTube every now and then. And then I was introduced to The Motley Fool. I love The Motley Fool podcast. I love their methods. I love their psychology when it comes to investing. And it's kind of funny because the Motley Fool style is the exact opposite of this Warren Buffett value. Motley Fool, they want you just to find great companies and just buy them. Buy, and just hold them forever. Whereas this Warren Buffett value investing is waiting for the right time when you find a great company, but also at a great price. So yeah, I'd say I'm kind of schooled in both of those methods, and I'm probably 50-50 in each. But those are my main resources right now. But I'm always open to learning new things, and I just look forward to continue to learn every single day.
Awesome, dude.
Yeah.
So the part that I'm actually most excited to talk about right now, what are you currently doing right now? What are the things that you're into?
So I have 4 main accounts. Well, actually 5. I'll go ahead and talk about one of my retirement accounts. I have a retirement account through Empowerment. That's through my work. It's just a Roth 401k. I think I put about roughly $600 a month in it, but it's just all in index funds right now, and specifically VTI, which we'll talk about that another day if you don't know what that is. The next account it's a Fundrise account, and this is a way to do real estate online or through your app if you can't do physical real estate yet. They do this through crowdfunding. Basically, they invest in real estate projects all over America, from Texas to California, Tampa. It's awesome, like I said, if you can't do physical real estate yet, and it's actually becoming one of my favorite accounts. I also have a crypto account through Coinbase. It is made up of mostly Bitcoin and Ethereum. I do have a little bit of Cardano and a little bit of SHIB. I'm currently getting interest on the Ethereum, a little bit of interest on the Cardano. I'm really excited about the future prospect of Bitcoin, or I guess about crypto in general. But I'm excited to, with this channel, we get to study that and we get to watch it grow.
Definitely gonna be talking a lot about crypto.
I don't think I'm going to put my full portfolio in crypto, but I don't mind having 10 to 15% right now. If it doesn't do anything, I didn't lose much. If it's big, I'll get some of that return. My third account, I have a joint account with Ryan. This is through Fidelity. We actually own 76 stocks in this account. A lot of these are partial shares, not full shares. A lot of random things. You'll see anything from Amazon, Apple, Tractor Supply, Tesla, Trade Desk, Shopify, just to name a few. But really, this account is more for data collection. We're just learning. We're just buying good companies, holding on to them, and seeing what happens in the future. Exciting stuff. Lastly, my favorite account is my Roth IRA in Fidelity. Currently, I have 0 stocks in this account. I'm trying to get in cash about 10K. When we do have a market crash in the next couple of years, which is my opinion, that's not advice. I want to have a decent amount of cash to buy some really great companies that I'm excited about. Now, we're going to talk about some of those companies in further episodes, just how to do valuations and stuff like that. So that's going to be super exciting. So yeah, what about you, Ron?
Yeah, so to start off with, I also have a Roth 401k through my company. That's fully allocated towards an S&P 500 index fund, which is great. I actually just found out that they had that on there, which is nice. So I just fully put it all into there. I got a Roth IRA. My wife also has a Roth IRA, and we're just putting money into it right now. We're not really buying anything. We kind of want to see how the market goes a little longer.
Smart.
Before we start getting into that. I also have a health savings account through my company as well, which we can also talk about that in later videos because it's a pretty good one as well.
It is. It's awesome.
And that I'm planning on putting that into VTI as well because
VTI is another index fund. It's another index fund that we'll talk about.
Yeah. Yep. I got those. I have the joint account with you. I have a Coinbase account, which right now it all has SHIB in there, but I'm planning on getting into Bitcoin,
nice.
Ethereum. Just trying to get into those and look into more coins in the future. And besides those, I believe I have my own personal Fidelity account. I forgot about that one.
Yeah.
That one has a lot of my short squeeze plays in there.
Some AMC in there.
Yeah, AMC, Vinco Ventures,
AMC.
Yeah,
fun.
Just some other companies that I have in there. Like I got like Fiverr, Trade Desk. I got some companies.
Awesome.
That was doing okay. It's in the red right now, but you know what? There's gonna be times where the accounts are gonna be in the red.
Absolutely.
Yeah,
let's kind of go into. Alrighty, so we have a couple more questions we're going to talk about. So tell me, what have you learned from your mistakes, and what are some successes that you've had so far?
All right, so the biggest mistake that I've done is not doing your due diligence and not doing research. Just going blindly into plays, just throwing money into stuff. Especially options trading. Primarily me. There was just a lot of different times where I was just like, oh well, this stock's running, so let me just buy a couple of options, and then it's like, I would lose like $50 here, $50 there, and before I knew it, on my taxes this last year, it's like, oh, I lost like $1,000. It's just stuff like that.
I'm right there with you, man.
Yeah. So
we learned.
Yeah, we did. We did. And it's not to say that we're not going to do options again in the future, but I'm kind of just trying to be a little more,
for sure,
a little more moderate risk now. So, not doing due diligence, not doing research, going in blind, not being patient. Because I would just FOMO into things all the time and just be like, oh my gosh, like this is my opportunity, this is my chance, and then all of a sudden, the rug gets pulled under me. Not that I went into these like crazy plays that were really really high risk, but just some of the stuff that I would do swing trades every now and then, and it just ended up where I would just FOMO in, and I would either make a little bit of money or I would lose more than what I was willing to gain.
Right. And
What
for
I'm
some of the
trying to
older
say.
people watching, FOMO is fear of missing out. Just to let y'all know. I'm sure
Right.
y'all know that though.
Yeah,
But
that's right.
just to be safe, just want to let y'all know.
Yeah. So going on to the second part of that question, my successes, what I've learned is that time will do its thing,
Mm-hmm.
and every dollar counts, and every dollar
Sure does.
that you put into things, those things start to add up over time. That's why I'm really excited to get into talking about like the Roth IRAs and just compound interest in general, because
Oh my gosh.
it's pretty amazing how many people don't understand how powerful it is when you're trying to build wealth. So
Compounding interest wakes me up every morning.
Every
a
morning?
big smile on my face.
all right. But yeah, man, that's the primary one that I've learned from my successes, and really just doing the opposite of my mistakes. So
Yeah.
yeah, what about
absolutely.
you?
Man, like you said, just being patient. Early on, I was reading a lot of Warren Buffett. I was studying his company, Berkshire Hathaway. I knew it was a great company. I knew I needed to buy it. I needed to hold on to it. I put a good amount of money into it. I got on the internet, was doing research, and I let the internet persuade me, saying, "Hey, Berkshire has seen its better days. There's no way that it can continue to have the returns that it had in the past. And you just need to kind of move on from it." Well, I kind of listened to the internet, got out of this account, or got out of Berkshire. And if I would have held on to Berkshire, I would still be beating the market today. And the markets, they're not doing great this year, but to have a company that's been green for the whole year, I mean, that's
crazy.
great. Yeah. And I don't have Berkshire anymore. So, it's a lesson, go with your gut. If you've studied the company, you feel good about it, you understand the finances, you understand the leadership behind it, you understand the intrinsic characteristics, the moat behind it, stick with
On the
it and
moat,
just
yeah.
be patient. Yeah, I just wasn't patient. I mean, that's probably what I've learned the most this year. And also, like Ryan said, FOMO. Like early on, I just wanted to buy everything. Oh, I need to buy this. I need to buy that. Like every day, it was some kind of new company that I'd get excited about. But I've learned like I can just have 5 to 10 companies that are really good, and I can still do great. So that's my biggest lesson. I'd say my biggest success was just getting into the psychology of investing every single week, especially into index funds. There really is a psychology to that. People have a hard time investing weekly, but I feel like that it's just something ingrained. I feel like I'm paying myself first, building for my future, and I'm letting compounding interest happen. So
Right.
that's been my biggest success. So Ryan, one more question. What are some things that you are interested in, I guess, researching for the future?
Probably the biggest thing is passive income, man.
Yeah.
Like, I really want to be able to find more ways to just have my money and assets just make money for me and use that to make more money. So really the biggest ones right now is real estate. Other than us buying a house, is looking into like maybe getting like a fixer up home or like a condo or something like that, and then just find a process that's good and kind of just like continue going forward from there, because we've seen how much people can be able to make from that. Is that the second thing probably is it's just building a brand through online. This YouTube channel, for example.
Build a brand.
Yeah, something I'm really excited to get into. Just really excited about that because being able to connect with people, even people overseas is always something that's been something that I've been really drawn to, and this is going to be a nice little creative way for me to be able to do that. So it's like this channel. I got some other YouTube channels I'm doing more like passion projects, but yeah, just just being able to build that online presence, and reach people, and just give and grow. So
absolutely.
But yeah, that's that's what I got so far as the things that I'm interested in researching. But yeah, man, what about you? What are some things that you're looking into?
I just want to keep learning every single day. Like you said, real estate, passive income, startups, angel investing. As we move into Web3 and crypto, I think we're about to move into some once in a lifetime opportunities. There's AI technology, everything. I'm so excited about all of it. And you know what? I'm excited about this community that we're trying to build here. We're going to be here for the ups and the downs, and we're going to learn and we're going to grow together. I know this is episode 2. We love you guys. We're thankful we get to do this. Before we go, I want you to leave a comment. Let us know, out of all the investments that we talked about today, from crypto, real estate, index funds, what do you think has performed the best year to date for the year 2022? We're going to answer that on our next episode.
Yep.
And I want you to put, what do you think is going to perform the best over the next 3 years? And we're going to look into that too. So until next time, we love you guys. Let's give and let's grow. Have a great one.
What's up, everyone? Hope you're doing well. I just wanted to quickly remind you, if you happen to enjoy this content, to please like, share, subscribe, comment, and turn on that notification bell to get updated on future episodes. We hope you'll have a good day, and we'll see you next time.